Hey, how's it going? Just want to make a quick video on my fair value gap strategy / indicator. I put it on my website. It's free. Anyone could download it and just message me your machine ID, and I could enable it for you. But there's plenty of other fair value gap indicators out there on the market. This one I created just because it's a little easier visually for me to see, and I could pick and choose which fair value gaps I want to actually draw out or highlight on my chart. But in any case, if you're interested in that, check it out. This is a little recap of how I'm looking at it. But in any case, let me first start. The way people typically trade the fair value gaps, if you watch some videos, Google some. I'm not an expert by any means, but there are some great videos out there. The real basic one is when you get a fair value gap, which in this particular case, the green boxes are buy side, the red boxes are sell side. We get this big push up. We get this fair value gap up here, and people like to play the bounce into that. So we get this push up here, bounce right into this fair value gap right here, and it bounces. There's different ways to play. People like to put fibs on this. So if you took a fib and say, hey, you wanna get a retracement off of this. I think I did the wrong way. I gotta actually go up here. So 50% down here. Some people like to call this the optimal zone when you're trading fair value gaps, or the discount zone, whatever you want to call it, where the lower ones are more likely probable to bounce off of. So you can see right here too, we had a bounce off this fair value gap, a bounce off of this fair value gap, and then down here, this is the optimal zone, the 50% to 6180 retracement, and you can see each time it kind of bounced. They had their own little bounces off it. That's one way people trade it. I've been watching, just basic. The other way is playing inverse fair value gaps, where you short you short buy side fair value gaps after a sweep of liquidity. So in this particular case right here, we came down, popped up, we came right to this, we cleared this liquidity out, got rejected, then we had this bullish fair value gap form right here. Once we closed below that bullish fair value gap, another strategies I've seen on, just watching videos and stuff, they like to come down and short after this, because once that fair value gap's mitigated, it's invalid, and people like to take that as a short with the stop typically above either swing high, or maybe if the fair value gap is a little bit closer. But anyway, it's all risk. As far as stops go, it's pretty much risk tolerance too, if you want to gauge how that is for you. But anyway, there are two main strategies that people use I've seen. It's just playing the bounce, or playing the inverse and where it falls through. But in any case, I do use those. I have been using those as well, but I also like to use the overlapping, what I called golden zones, because it's easier for me to see on this my indicator or strategy that I built. But you can see here that we have some gold areas here. I'm calling it the golden zone. So whenever you see these gold areas, they're overlapping. I have an hourly one that I set up here. We have an hourly one and another one in between. You can see, I think I mentioned it earlier, we have POCs up here as well that kind of made it easier, a nice little spot to short, because he had some other levels within here, not on this chart per se. But in any case, when I see overlapping areas, so this one right here, we get this sell side fair value gap, and then a couple candles later we get this buy side fair value gap. So I draw out my rectangle there. You can see how it bounces off it. These things do break down from time to time. So I usually play the first test, which is pretty good. And we also have the 21 EMA right there too, so that kind of adds a little bit of confluence too if you want to hop in this. We actually had this one form down here too. You can see that we had the red and the green, and it came down to this area later in the day. It did bounce a little bit off of it, got a little push, but ultimately it just that one failed. Like I said, they're not all foolproof, but they're actually pretty good spots if you want to grab, for entries or even targets really. But if they break down, they're actually nice to trade off of too. So once you break down, it would be support, or there would be a resistance at that point. Same thing here. We had this green one, so we had this buy side. You can see this dip right here. This is just a regular buy side that you could have bought off the retracement down to here, and you took that earlier. But once later in the day, we had this one form. We had the sell side form. Once this pretty much got mitigated, this fair value got mitigated, we're meaning that the price closed below it. Still, but I like to highlight this area, because that area where they overlap is what I'm noticing is more important in terms of like resistance and support. So you can see right here, once this candle right here formed, I drew this line out, and you can see how it kept not getting over that. So in this particular case, if you're looking for a short entry, you'd be comfortable putting your stop up here and trying to hop in a short right here. And we also had another point of control right here, which was I think Friday's, no sorry, where's that? Friday's point of control was right here. So the Friday's point of control is right here, so that kind of left me another point of confidence that, you know, we're getting rejected here. We have this golden area, and I believe the candles, my other indicator was actually red, and we had some red candles too, so I had a bunch of things going saying, you know, it's a good short right here. But yeah, so that's what I'm looking at. So that is the golden, I call it the golden zones. They've actually been pretty good. You could try them out. I know there's one over here. So this one was pre-market. I took this, I think this was overnight trading. So we had this big, this is that big golden zone right here. We had this one overlapping with this one over here, the buy side. You can see how it kind of consolidated a little bit, and even later in the day we kind of got some support around this level. And then we actually, you know, this is the hourly box, so you can see end of day we kind of broke through. This was an hourly fair value gap that, you know, is kind of wide, so, you know, just to keep in mind on that. Like, that's what I've been looking for too. Like, to trade in here, it's kind of, you know, you want to make sure, you want to wait till like either it clears it or like bounces off it to kind of feel more confident. But you can see how we bounced off it, trade around, and then ultimately we just kind of sold off, and then we have another hourly fair value gap right there. So it'll be interesting to see how that plays out the next couple of days, since we're kind of breaking some of these. Same thing on the NQ today too. I'll pull that up. It was very similar. So this is I'm doing micros right now because I've been focusing on micros just because it's a new strategy I'm trying out as far as fair value gaps go. But in any case, you can see here, I think this was a pre-market right at the open. We had this, so we had this form pre-market. We had the overlapping. I drew my chart. I drew my golden zone out right at open. Came up, tested this area, and then sold off pretty good there. We came back, we tested. So this is another. Came back in the golden area, broke through it. Obviously, like I said, the first test is usually, you know, the most success I've seen. And then we had this bullish 5-minute form as well. And like I said, how people play this, one, they could play the bounce off of this, and hopefully, you know, maybe get a bouncer up. But a lot of people like to play the inversion when it closed below, especially because we took out some of this, some of these swing highs right here. So we took out some of these swing highs. Yeah, you like to see more wicks up here, but we took out the swing highs. Once we broke below this fair value gap right here and the golden zone, that was telling me, you know what, we could probably go short here and feel comfortable putting a stop like right above here, and let it ride a little bit. But they had some good signals on the NQ as well. You can see down here we had this box form, right? Bounced off, it ultimately broke down. Like I said, then it becomes resistance, so it's a good zone. And these boxes on the 5-minute happen maybe 3 to 4 times. On a 10-minute, I've seen them happen maybe 2 to 3 times, depending on the day. But they're pretty powerful, especially when they overlap. Like if I had a 10-minute one inside of this one, that'd be even stronger. Or an hourly maybe, that actually becomes stronger. But these levels have, you know, actually been helping as far as getting better entries. And targets really too. So if I see it break this level, I think it's going to come down and test this fair value, or this little gap down here, in terms of mitigating this full its buy side. But it's actually a pretty neat. I also have, it actually alerts you too. The actual strategy one that I have is alert you when boxes form. It works across all time frames. So, but in any case, you can see another one here. I didn't draw this one out, but I'll move it right now if I can. There it is. So we have this red one over here with this green one. You see nothing really closed above it. So I'm just gonna see right there, but you can see entering in this level. Like, you want to know it right here. This is more of just like a sell side right here. So you pop. That would be more just a regular sell. People trying to play the rejection off of this. But when this box formed over here, probably would have formed on this third candle, because it is a 3-candle pattern. So once it closed above that, you might have to wait until to see like how it reacts to that. We did have a strong push up, but then we start having these wicks come, and it would have formed on this candle. So we already got some selling pressure right here coming down. And I believe this is actually, if you take this, like I said, some people like to play the retracement. So if you take this high right here to that low, this is right in the optimal zone, we'll call it, for for trading fair value gaps. People, like I said, they like to trade the 50 to 61% retracement. Like say, if you're looking for a short, you're going to come up to this and try to short it because you're in a fair value gap right here. So this part of the fair value gap right here, the red, that'd be a perfect trade. I've been seeing that happen a lot too, which is pretty good in terms of getting a good entries and waiting and being patient. Sometimes it doesn't always make it to the 50. You know, maybe it falls short, but in any case, today was actually a good day for it. So that's that. And then, you know, we had another one form over here, but end of day we kind of just like sold off pretty hard there. So it was an interesting day. Like I said, if you're interested in checking out this little strategy, it's free. I'm not trying to charge anything for this one. This one just kind of needs your machine ID though, and anyone in the group can get it for free. So hope you enjoyed this. Any questions, let me know.